Welcome back to Talk Tickers, everyone. Ready for another deep dive? Today we're going to break down ConocoPhillips' Q4 2024 earnings call.
Yeah, these earnings calls always provide a fascinating glimpse into how these big players are moving and shaking in the energy world.
For sure. So ConocoPhillips, well, they didn't just meet expectations, they blew past them, posting a solid 4% production growth for 2024, which actually topped their own guidance.
And on top of that, they're really taking care of their shareholders, planning to return a cool $10 billion in 2025 through a mix of dividends and buybacks.
Talk about shareholder love, right? And all of this while smoothly integrating their recent acquisition of Marathon Oil.
Which is no small feat, by the way. Merging two large companies like that takes a lot of finesse.
Absolutely.
Yeah.
So let's get into the nitty-gritty. What exactly is driving this impressive performance? What caught my eye right away were those record production numbers, particularly in the lower 48.
Oh, yeah, an 8% year-over-year growth in the lower 48. Even if you exclude the Marathon assets, that's pretty remarkable.
Yeah. So how did they pull that off? Did they just start drilling like crazy?
Actually, no. It's not about brute force. It's about efficiency. They've managed to squeeze every ounce of productivity out of their existing operations. Think about it. Drilling more feet per well, completing more stages per day, bringing wells online faster, all without adding a single new rig.
Wow, that's impressive. It's like they found a secret formula for maximizing output.
Yeah.
But they're not just pumping oil and gas indiscriminately, right? They're being strategic about where they're putting their money.
Yeah.
With $12.9 billion set aside for capital expenditures in 2025.
And a good chunk of that is earmarked for major projects that could really shake things up in the long run.
Exactly. It seems like they're playing the long game here, but they're also making some pretty bold moves in high-growth areas, like Alaska, for example.
Oh, Alaska is definitely a hot spot right now. Their Willow project, which is a massive undertaking, is moving along smoothly. Peak construction is expected later this year, and this project is a real testament to ConocoPhillips' commitment to exploring new frontiers.
It's going to be interesting to see how Willow contributes to their production once it
Right.
comes online in a few years.
Absolutely. It's a game changer for sure. But Willow isn't their only play in Alaska. Their existing operations are humming along nicely, and they're actively pursuing new opportunities in the region.
Like the Nuna project, for example. Their first new pad development in Alaska in like a decade, right?
That's right. Nuna is already online and contributing to offsetting decline. And they've got a whole pipeline of promising prospects in the region like Coyote and Kuparuk and Narwhal and Minky in their western North Slope alpine asset.
Wow, so they're really doubling down on Alaska. It sounds like they're taking a pretty multifaceted approach to growth.
Definitely. They're not putting all their eggs in one basket. They're balancing their investments across different regions and leveraging their expertise to unlock value wherever they can.
It's like they're playing chess while everyone else is playing checkers.
That's a great way to put it. And they're doing it all while navigating a pretty complex web of geopolitical and regulatory challenges.
Like the potential impact of those U.S. tariffs we've been hearing about.
Exactly, especially on their Canadian assets. But they're also being proactive, engaging with the new administration on things like permitting reform. They're really pushing for a more streamlined regulatory environment that can support domestic energy production.
Smart move. So they're definitely keeping their fingers on the pulse of the industry.
Yeah.
But all this talk about production growth and capital allocation can get a little dry, you know?
I hear ya. Ready to shake things up with a hypothetical.
Oh, yeah. Always up for a little what-if scenario.
Okay, buckle up. So what if ConocoPhillips decides to go all in on powering data centers?
Wait, what? Data centers? How does that even work?
Think about it. Data centers are massive energy hogs. And ConocoPhillips, with their vast natural gas resources and extensive land holdings, could become a major supplier of clean and reliable power to this booming sector.
So they could be the ones powering the servers that run our digital lives. That's pretty wild.
Yeah. Right. It's a bold move, but it makes sense. They could leverage their existing assets and expertise to tap into a whole new market.
And it aligns with that growing focus on sustainability.
Exactly. Data centers are always looking for cleaner energy sources.
It's definitely a thought-provoking idea. It just goes to show that the energy landscape is constantly evolving, and companies like ConocoPhillips are having to adapt and innovate to stay ahead of the curve.
Absolutely. It's a fascinating time to be watching this industry unfold.
So ConocoPhillips, they're exceeding expectations, rewarding their shareholders, and strategically positioning themselves for long-term growth.
Yeah, they're firing on all cylinders.
It's a pretty impressive story. But how sustainable is this performance? Can they keep up this momentum in the years to come?
Well, that's a question we'll be exploring in our next segment. We'll take a closer look at some of the factors that could impact ConocoPhillips' future performance.
Stay tuned, folks. This deep dive is just getting started.
So let's zoom in a bit on some of the details driving ConocoPhillips' success. Their performance in the lower 48, for instance, is a case study in doing more with less.
Yeah, their efficiency gains in that region are remarkable. They managed to trim capital spending by 15% year over year, but they're still projecting low single-digit production growth.
Right. It seems counterintuitive, doesn't it? How do you achieve growth while simultaneously cutting back?
Yeah, it's almost like having your cake and eating it, too.
Well, that's the magic of their strategy. It all comes down to working smarter, not harder. And a lot of it has to do with the synergies they've unlocked through the Marathon acquisition.
Ah, so it's not just about cost savings. It's about leveraging the combined expertise of the two companies to squeeze every drop of value out of their assets.
Exactly. They're optimizing everything, streamlining processes, sharing best practices, and really getting the most out of each well.
So it's a shift from that old drill baby drill mentality to a more measured and sustainable approach.
Precisely. And the results speak for themselves. They've seen a 15% improvement in scope in 2024.
15%. What does that even mean in practical terms?
It means they're doing 15% more work with the same resources. More feet drilled per well, more stages completed per day, more wells coming online, all contributing to that impressive production growth.
That's incredible. So they're not just riding a wave, they're actually creating a sustainable model for growth.
Exactly. And the best part is they're confident that they can maintain these efficiency gains for the foreseeable future.
Now that's what I call a recipe for success. But their growth story isn't limited to the lower 48, right? They're also making substantial investments in other regions like Alaska and Canada.
Absolutely. And Alaska in particular is a long-term bet that's starting to pay off big time. The Willow project, for example, is a massive undertaking. And it's not just about drilling wells. It involves building a whole network of infrastructure in a really challenging environment.
Yeah, I heard about that. Ice roads, gravel pads, pipelines, the whole 9 yards.
Exactly. And they're not cutting corners. They're investing heavily in this project. In fact, spending is projected to jump by $500 million in 2025 compared to 2024.
Wow, that's a serious chunk of change.
Hmm.
But Willow isn't their only focus in Alaska, is it? They've got other irons in the fire up there.
Oh, absolutely. They're actively developing other opportunities in the region. The Nuna project, for example, their first new pad development in Alaska in a decade, is already exceeding expectations.
That's great to hear. So they're not putting all their eggs in one basket. They're diversifying their bets within Alaska.
Exactly. And they've got a pipeline of promising prospects in the region, too, like Coyote and Kuparuk and Narwhal and Minke in their western North Slope alpine asset.
So Alaska's shaping up to be a major growth engine for them. It's like a whole new frontier opening up.
It is. And they're leveraging their deep expertise in the region to really maximize the returns.
Very impressive.
Yeah.
But let's shift gears for a second and talk about the financial engine that's driving all this growth. Their capital allocation strategy, they're planning to spend $12.9 billion in capital expenditures in 2025.
Yeah.
How are they breaking that down?
They've actually given us a pretty detailed breakdown.
Yeah.
And it's fascinating to see where they're prioritizing their spending.
So spill the beans. What's the scoop?
Well, on a pro forma basis, they're actually reducing spending in the lower 48 by about $1.4 billion compared to 2024.
Really? That's interesting. So even though they're seeing great results in the lower 48, they're actually pulling back a bit.
Yeah, it makes sense when you think about it. They've already achieved remarkable efficiency gains in that region, so they're not looking to add new rigs or dramatically increase activity there.
So it's all about optimizing what they already have.
Exactly. But at the same time, they're ramping up spending on those major projects we talked about earlier.
Ah, yes. Those big long-term bets that could really transform the company.
Precisely. They're allocating about $3 billion to major projects, which is a $400 million increase compared to 2024. This includes the Willow project, of course, but also other significant investments like the Port Arthur LNG project and NFS.
So it's a balancing act. Reducing spending in some areas, increasing it in others, and always looking for opportunities to maximize returns.
And that's what makes their strategy so compelling. They're not just chasing short-term gains, they're playing the long game, making strategic investments that will shape the future of the company.
It's textbook capital allocation. Really impressive. But beyond the numbers, what does this all tell us about ConocoPhillips' overall direction? Where are they headed in the grand scheme of things?
That's the big question, isn't it? And it's one we'll be tackling in our next segment. We'll delve into the factors that could impact their future performance, from geopolitical risks to the ever-evolving energy landscape.
Sounds like a fascinating discussion. Stay tuned, folks. We're about to get really interesting. All right, welcome back to Talk Tickers. We've spent the last two segments really dissecting ConocoPhillips' Q4 2024 earnings call. And gotta say, they're really killing it. Record production, some really savvy acquisitions, strategic investments. They're checking all the boxes. But as we wrap things up here, let's zoom out a bit and look at the bigger picture. How does ConocoPhillips fit into this rapidly changing energy landscape?
Yeah, that's the key question, isn't it? I mean, the energy sector is in a constant state of flux. We've got technological advancements coming out left and right, geopolitical shifts that are shaking things up, and of course, the growing concerns about climate change. So how does a company like ConocoPhillips, a company built on oil and gas, adapt to this new reality?
Well, they're already making some moves. Their investments in LNG, for instance, show that they're recognizing that global demand for natural gas is increasing, especially as a cleaner alternative to coal. But is that enough?
It's a good start, for sure. But the real question is, how far are they willing to go? Will we see them making bolder moves into renewable energy sources like solar and wind? Will they invest in carbon capture and storage technologies to lessen their environmental impact? Now, these are the questions that investors and analysts are going to be asking as the energy transition picks up speed.
And they've shown that they're willing to adapt in the past. I mean, look at the Marathon acquisition. That was a pretty bold move that reshaped their portfolio and really strengthened their position in key markets. Could we see more game-changing moves like that in the future? Maybe even venturing into completely new energy sectors?
It's definitely possible. Companies that are slow to adapt risk getting left behind. And ConocoPhillips, they have a history of strategic acquisitions and investments. Plus, they have the resources and the expertise to make a real impact in this emerging energy landscape. The key for them is going to be their ability to anticipate those market trends, to really embrace innovation, and to make bold decisions that set them up for long-term success.
It's a fascinating case study for sure. The story is definitely still being written. ConocoPhillips it's at a crossroads, and the choices they make in the next few years are going to be critical. But before we wrap up completely, let's have a little fun. It's time for our This Is Not Financial Advice segment.
Well, it's the time for speculation and those wild hypotheticals. I'm all ears.
All right, so hear me out. What if, and just go with me on this one, what if ConocoPhillips decides to use their expertise in operating in those remote and challenging environments and become an Arctic adventure tourism company?
Whoa. Okay, that's a curveball. Tell me more.
I'm serious. Think about it. They already have the infrastructure, the logistics expertise, they know the terrain, and they've got tons of experience working in extreme conditions. They could offer eco-friendly expeditions, guided tours of the Northern Lights, maybe even build some luxury lodges in the Alaskan wilderness.
ConocoPhillips Adventures. It's got a ring to it, right? They could tap into a whole new market of travelers looking for those unique and unforgettable experiences, especially those who are eco-conscious.
Exactly. It's a totally wild idea, I know. But is it really that far-fetched? It could be a way for them to branch out, diversify their revenue streams, and even position themselves as a leader in sustainable tourism.
I love it. It's out-of-the-box thinking, and that's what this segment is all about. Pushing the boundaries and exploring those unconventional ideas. Who knows, maybe someday we'll be booking our Arctic adventures through ConocoPhillips.
That's a trip I would definitely sign up for. All right, folks, that wraps up our deep dive into ConocoPhillips. We've covered a lot of ground today, from their stellar financial performance to those big challenges and opportunities they're facing in this rapidly changing energy world. We even threw in a few wild hypotheticals just for fun.
It's been a great discussion, and we hope you've enjoyed listening as much as we've enjoyed breaking it all down for you. But before we sign off, remember, this is not financial advice.
We're just two energy enthusiasts sharing our thoughts and perspectives. Always do your own research and talk to a financial professional before making any investment decisions.
Absolutely. Until next time, keep exploring, keep asking those questions, and keep an eye on this ever-changing world of energy.
That's right. And thanks for joining us on Talk Tickers. We'll see you next time.